Check 1, 2, 3.
चेक कर रहा चेक करो फिर फोन करो
Mr. Gupta, can you hear me?
Yeah, now I can.
Hi, sir. Good evening. Prashant here. We're just starting.
Good evening, Prashant. Thank you.
Good evening, ladies and gentlemen. Great to have all of you here. We are, of course, coming to you from the sidelines of the Motilal Oswal Wealth Creation Study. It's the 29th edition. Each study, of course, is something to behold. It's a study into which a lot of hard work goes in. Raamdeo ji, of course, spearheads the study, but an entire team is involved. And, of course, it's been our pleasure at CNBC-TV18 to bring this study to you year after year. As I said, it's a 29 study. Raamdeo ji was earlier joking with me that at least about 5 years of his life have gone into the wealth creation study, maybe more. And we'll get to it in just a bit. It's a very specially curated panel that we have with us today because we'll hear not just from investors. We have Raamdeo Agrawal, of course, with us. Amit Goela needs no introduction as well. He's a veteran investor, partner at Rare Enterprises. He's been with Rakeshji's side for 20 years plus. And he's, of course, seen the ins and outs of markets for a long time. But we'll also hear from corporate veterans. Anish Shah is Group CEO, MD at Mahindra Group, someone under whose watch the Mahindra stock has gone up about 4 times. And it's great to have you with us here. Thank you very much. And of course, Mr. Akhil Gupta joins in as well. He's, of course, Vice Chairman at Bharti Enterprises, someone who's, again, been in a sector which is, I think, has been a tricky one over the last 2.5 odd decades. But Bharti, of course, under his leadership, has emerged as a big winner. So once again, thank you all for being here. Now, the topic for the discussion, of course, is how to profit from bruised blue chips. And that is essentially what we're going to be talking about. There is, of course, the wealth creation component part of it, which I will get to in just a bit. But I think it's really interesting how to profit from blue chips which have fallen out of favor. Bruised blue chips, as Raamdeo ji put it in his study. So, Raamdeo ji, why don't you set the context for us? What do you mean by bruised blue chips? How do you decide that they are really bruised? And how does repair happen? And when do you buy them?
So I think there are 2 aspects. One is the definition of blue chip itself, and then how do we define the bruised blue chips? So blue chips are the companies which, in our view, earns at least 20% return on equity for average return on equity for 10 years. And that does the magic of creating wealth for the companies. So 10 years of average return on equity, there are not many, maybe 20, 25%, 22% of the listed companies in top 250 are blue chips. And then also by size. I mean, you need to have size and stability leadership. So top 50 nifty companies and the companies of 250 at the companies with 20% ROE, we have termed them as blue chips. Because blue chip is practiced all over. Everybody talks about blue chips, but nobody tells the definition of blue chips. So we have defined for the study definition of blue chips. Second is, what is a bruised blue chip? Bruised blue chips are companies in last 5 years, whatever is the high, and now the companies have fallen by more than 50%. Say if company has gone to say 1,000 and it has fallen below 500, 60, 70, 80%. So those companies are bruised. They have not lost the blue chip status, but for some reason, competition or failure products or regulator or whatever, the stocks have fallen by more than 50%. That we call them bruised. So these are the two things which we have to keep in mind while talking about bruised blue chips.
You know, typically one would imagine, Raamdeoji, that blue chips don't get bruised, right? Once in a while they do. COVID happens or the GFC happens, but otherwise blue chips are blue chips. But as your study shows, they do, and quite regularly.
Quite regularly, every year. I mean, if you see the study period of 5 years, every time out of 250, 78 companies are the blue chips on an average. And of that 40, or literally half, they get bruised. Other half, they don't get bruised, as you say. But 40%, so no blue chip has traveled the journey without getting bruised. Maybe TCS or Infosys might be 2 or 3 companies, but actually almost all the companies, they go through a rough patch, and that is the point of time when they're deeply bruised. I think if you understand the company, you can buy tons of them.
And as your study shows, the hit rate is pretty good. When you buy them at that very, very bruised state, you tend to make a lot of money.
I have not practiced. Probably Amit can talk more about it, because for me, this is just the study.
Right.
But if you practice it, I mean, few companies I know for sure, which came to my mind, that was one of the Jindal Steel. Since I know that company, DLF at 70, 80 rupees, I have gone on record saying that this is a great time to sell your real estate portfolio and buy into DLF. So 2, 3 companies I remember, but I have not made too much of money out of bruised blue chips.
Amit, that's a cue for you. Raamdeoji says he's not practiced it, but you've been a big practitioner over the last 2 decades plus. So tell us a little bit. I mean, you heard the presentation earlier, you heard Raamdeoji explaining it.
One of the core style of dear Rakesh and your mentor and partner and boss, I mean, I think he had the unique style of picking these companies. Yeah. Because whenever I used to meet him, he used to tell me, this is the Raamdeo, this is the stock I bought, why don't you buy them? Chahe Scores ho, chahe Indian Hotel ho. But I never could see the light of why he's saying so. In fact, I used to feel this guy is already drunkard, and probably he's telling me something which he wants to pass off. I mean, that used to be my feeling. I never made money out of it. And he was so sincere. He always wanted me to make money. And now I can see that what he wanted. But it's too late. Anyway, Amit.
Yeah, Raamdeoji, thank you for having me here. So Prashant, as you said, I've been with Rakeshji. So Rakeshji was the practitioner of this kind of investing. I was supporting him. I was helping him doing the work. But the real practitioner was Rakeshji. And I've seen him consistently over a period of time pick stocks like this which were in trouble, or the companies were in trouble, and he's made serious money in them. And the starting, he never coined them as a bruised blue chip or anything of that kind. He was a value investor. And his starting point was that cannot be a loss of capital. See, he would invest through leverage. And he would service the debt through either dividends or from trading income. So there was no question of a capital loss. So anything which was like a book value, though I don't even remember calculating too many times around when I was around him. But PE was quite critical, and dividend, like sometimes most of these companies were not even giving a dividend because they were in bad shape. So the PE was very critical. The market cap in terms of the opportunity, that was very critical. Those are the couple of things he would look at. And his basic core was there cannot be a capital loss. So he said, my edge is I have time on my side. I'll keep sitting tight. I don't have any benchmark to beat. I don't have to prove anything. And so I will remain invested, but I cannot have a capital loss. That was his basic core of investing in these kind of companies. And he had a very open mind. So it was not, I will only look at one sector. He invested across sectors. We were sector agnostic. Yeah, like so.
You know, let's get this very well put, Amit. Anish, you know, we get the investors' viewpoint all the time, but it's a hall full of investors waiting to hear from you and Akhil. You came into Mahindra & Mahindra, and I dare say M&M was not bruised, but it was going through a tough patch. And you came in and you turned things around. Talk to us about that point when you came in. What was on your mind? What was the task given to you? And generally, what were the conditions? I mean, what was the experience like?
The start of the first phase of my role, the first year was as Deputy MD and Group CFO, began on 2nd April 2020. And that was a time when we had just hit a low point. The stock had lost about 70% of value. SsangYong was a major burden, and we had close to 5,000 crores of losses from what I called our loss-making entities. And as a result, the results of that year were just about break even. And it was the start of COVID and no revenue for the first month of April. So that was the starting point. But the foundation was very strong. And that's one thing I want to highlight in terms of the bruised blue chip story, is that the foundation had been built over many years. And in fact, it was a Motilal Oswal analyst report that in 2018 had highlighted that M&M was the best performing stock in the Nifty since 2002. And that doesn't happen easily. So there were many elements of the company, of the group, that were important and took us forward and helped us weather the storms. Yes, there was some reason for the storms, but the people we had, the talent was of a completely different quality. The ethos of the company, the purpose-driven approach, the focus on entrepreneurship, all of those were elements of the DNA of the company. And which is why even through those storms, we never really were very concerned, because we knew that we were going to get out of that very easily. So I give a lot of credit to our predecessors who really helped set us up for success. And we had to just go forward and implement the few things that we felt were important.
You're being very humble, Anish, and very nice to people who, of course, and rightly so. But I think what we want to know is, what did you do? I mean, you set the ball rolling. You set ROE targets, and you sort of, decided to sell off some of these unrelated diversifications and all of those things. I mean, just talk us through. I mean, the point that Raamdeo ji made, external mistakes, internal, sometimes you kind of sort of go astray, large companies. So just talk us through those moments and what you saw.
So let's start with the losses. We knew that we had to address that, and we had to do that quickly. And therefore, we created a list of companies that made that 5,332 crores specifically of losses. SsangYong was highest on the list with 2,400 crores of losses that year. And we said that if we are to be credible, that's the first decision we have to take. And Raamdeo ji is right. A lot of people at that point said, you said this, but it's not going to happen. Right? And therefore, we had to make that happen. But that wasn't enough, because we still had another 26 or 2,800 crores of losses. And therefore, we had to exit a number of other companies, and we categorized them. We said, look, some of them actually could be good jewels for us if we can turn them around. So our categorization was category A, companies that can be turned around, and they will be companies that we'll be proud of, and they can meet our 18% ROE target. Category B, companies that will likely make some losses but have a quantifiable strategic benefit for us. And category C is none of the above, and therefore they need to exit. And we exited 15 companies in the next 18 months or so. And we just moved very quickly and did that. We did not wait in terms of any sequential order. We just started that simultaneously. So that was the first big step. The second big step was pivot to growth. Because just meeting an 18% ROE target is not enough. If you don't see EPS growth as investors, it doesn't matter from an investor standpoint. So we very quickly pivoted to growth from there. and we identified a set of companies that we thought were very strong and what we call the growth gems. And these were strong because they had a strong position in their industry, at least from a potential standpoint. They had a strong, what we call, right to win. And these growth gems collectively had valuation of less than $1 billion in March 2020, close to about 900 million. And the first thing we did there was to say that if you have an aspiration to be a $1 billion company standalone, you'll be called a growth gem. And the aspiration has to be matched with a plan that in the next 3 to 5 years, you will be a $1 billion company. 3 years later, the collective group had gone from 900 million to 3.4 billion. And we raised the bar. At that point, we said that to stay a growth gem, you got to now grow 5x in the next 5 to 7 years. So that 3.4 must go to 17. And that's one part of what's driving our growth now, is the ambition as well as the ability to then deliver on each of our businesses.
You communicated obviously very clearly internally. Did you communicate as you were going along externally as well to the outside world, investors, the investor community?
In June 2020, June 12th, 2020, we communicated an 18% ROE target. And the basic response back from investors were, "You're crazy. There's no way you're going to do this." Right?
But how did you arrive at 18%?
Because we just looked at it first to say that, look, if we take 5,000 crores of profit out, or rather losses out, right, that comes in. And here are certain growth targets which we think we can meet. And therefore we said, to be on the safe side, we'll get to 18% in 3 to 5 years. But we got there in 18 months because we could move quickly on getting those losses out and we could meet certain growth targets that we had laid out. So it was a very deliberate target based on here are the specific actions. If we take these actions, we get there.
And all these actions you did, you had a full authority to, because all these companies were collected by Mr. Mahindra with a lot of pain and effort. So did he give you full authority to just chop it off?
So the answer to that is yes. And that is one of the privileges, or I would say that something we're very grateful for, is that the teams were fully empowered. I would, in all cases, go back to Mr. Mahindra and seek his guidance. And he gave very good guidance in a number of areas. And he always used to say that, look, your goal is to create investor value. And you do what's right for the company. And that is how we worked.
Amit, you want to come in as investor's perspective?
Yeah, so I wanted to add two things to this. One, the turnaround becomes all... Sorry. I wanted to add two more things to this. The turnaround becomes all the more creditable because it was done during COVID. They made the announcement in August 20, like when you came up and said 18%. So that was in deep COVID. And then the follow through. And I have not seen a more publicly telegraphed and told to investors turnaround which has happened. Quarter on quarter, he would come on the conference call, he would put up the capital allocation chart and he would say, look, this is what I had said and this is what I'm doing. So all you had to do was to keep listening to the conference calls quarter and quarter and you would have made serious money. I'm not joking. 20 years I've not seen this kind of a telegraphing of a turnaround which has been happening on a public platform.
And when did you buy it? Fine.
See, we had been tracking Mahindra because we had owned Escort. So we had been tracking it for a while.
No, but did you double down once?
Not this one.
You wish you...
We didn't, unfortunately. We
you wish you did,
very,
obviously.
Very, very insignificant position. I wish we had done it. So.
But why didn't you? I mean, was it because you...
We had already invested in Escorts, Tata Motors. There was quite a heavy exposure in autos.
Raamdeo, you said...
I think you had gone into telco big time, isn't it?
Yes. We had got
they had taken at 70 to 90 bucks. They had bought 4-5% of telco. So now they can have only that much appetite for auto sectors.
Raamdeo, why did you not... you
I
said...
didn't have the framework. I used to think that any company which is going down, good Lord, I don't have that stock. I mean, I was about QGLP, robust companies growing, going to the sky. We always paid full price for the growth stocks. We were never practicing the companies which are going down. It was never in my... what you call syllabus to buy the companies whose earnings are going down. No, I never looked at it. That's why for me it's a very, very important study. Now when Asian Paints or anything is falling, it's an opportunity for me to look at, are they getting bruised enough for me to step in? And at some point of time, with the grace of God, probably will hit the opportunity.
So I think you're giving us what आपकी नजर कहाँ है? Asian Paints. वो उस पे बात करेंगे.
Let it happen. See, till it has happened 50%, let's not bother about it.
I see. Let's bring in Mr. Akhil Gupta, who's been listening in keenly. He's got a smile on his face. Mr. Gupta, thank you for waiting patiently. Tell us a story about Bharti. I mean, as I began by saying, it's a sector which is, I think, since '99, I mean, it's a regulation is one aspect, competition is another, and of course, you went through a very large player coming in, disrupting the market in a very, very big way. Tell us that story, Mr. Gupta.
First of all, my sincere apologies for not being there. You can hear me, I hope. So, sincere apologies. I really wish I was there among the stalwarts. Raamdeo, what a fantastic study, and how modest you are to say you did not catch this trend. So, really a great lesson. Well, telecom industry in India has not only been bruised, it has been battered. It has had existential crisis, not once, but twice. And so it's been a great journey. And some of the things which we learned in this journey was to stick to some fundamental beliefs. And those beliefs were, one, that in difficult times, strong companies become stronger and weak companies get weaker. Two, that to remain strong, the one major thing you have to take care is your balance sheet. Therefore, whatever you do, keep the balance sheet strong. And third, you've got to keep your flock, your people, really motivated. Of course, strong balance sheet helps in doing that, because the biggest demotivation for people is when you're not able to pay salaries on time, they're not able to pay vendors on time. I think steadfastly, through very difficult periods, we stuck to these three mantras. And so I think we were able to sustain and get over those very tough periods.
So, the second bruising, as you called it, the second episode, the crisis, as you called it, when Jio made its entry, and it was in the process of garnering subscribers, and it very quickly reached a very significant, large number. You kind of stayed the course with these three mantras, as you put it. You knew that you would come out stronger on the other side. You had to, or was there a moment of doubt? You had to do something.
Absolutely.
Sorry. Yeah.
Yeah, I think we had no doubt, because first we had no choice. Unlike many other groups, we only had telecom. When nothing to say, we can shut it down. So we had to stay the course, and we really believed in this mantra that if you can get over this difficult period, you will emerge stronger, which we really did. Oda Idea fell into difficult time because I think great company, but somehow it just could not manage the balance sheet.
No, absolutely. Raamdeo ji, come in here. Investors' perspective on, because you've seen this. I mean, I think this is, you're right there. I mean, if anyone knows this company, you do. So, talk to us a little
I
bit.
made the fastest money here, but not as a falling company. As a growing company in 2002-03, at 25, they came out with public issue, I think, at about $45. And in 2003, January, they declared the break-even. And then at 24 rupees we bought, and the stock went to 1180 in next 2.5 years. I mean, 50x in like 2.5, 3 years. So that was the ride I had. And that's why I have been meeting Sunil and Akhil ji off and on. But I was stunned to see the kind of capital management they did, in the sense that they went to Africa because they had so much of cash flow. They didn't know where to deploy. And so I don't know whether I would call it as a capital misallocation, but I think Akhil never agreed with me. But what's his view? I would like to listen.
Yeah, I still don't agree. We did have a difficult time in Africa, but that was, I would say it was a growth market. But of course, some of the currency problems have been very severe, which we never anticipated. Nobody can actually. Not a terrible decision, but yes, some internal mistakes in terms of execution. We are back on track, and I think ultimately we will emerge. We have come out of the shadows. So not a real bad capital allocation in 2010, when things were just phenomenal. We were making so much money that if we were not able to grow at that time, it would have been not good for the investors.
Amit, you have any thoughts on the Bharti story? I mean, the latest episode, what we talked about. I mean, what were you doing around that time? Did you look at the stock? What were your thoughts as an investor?
No, Bharti's done a phenomenal job of turning around things. They faced maximum pressure at a point of time. As an incumbent operator, whatever I have read and experienced, I don't think an incumbent has ever faced this kind of a pressure from a new entrant. Like it was like in basketball, you say full court pressure. It was that kind of pressure here, so. And they fought back and they came back, which was quite extraordinary here, so. And I think now they're here to stay, so. They fought it, and they fought it clearly on customer service, and and they brought down their cost to be able to operate at the structure at which the new person was operating.
Yeah, the change from a minute-based pricing to a database pricing, I think these guys, Bharti, was earning money by selling the minutes.
Yeah.
And here comes Jio, he says that there is no minutes. You have a flat plan of $100 or whatever at 200 rupees, and they're selling data. In fact, it was a complete migration from, say, cellular telephone to digital telephone. And the business plan, the tariff plan was completely different. It's a very disruptive thing to move from minute selling to flat plan. And that to flat plan, literally nothing. They pumped in 5-6 lakh crores, and they wanted that 50% market share. So there is a complete bloodbath on this thing. When you see from outside, I couldn't believe that anybody will survive. And now they survive, now they're prospering, and I think the best days are ahead. So, that's what has happened in M&M. They not only survived, now they're 11,000 crores profit that of last year. I don't know, this year they'll do 14,000-15,000, and the ambition are like even more. So they go for kill. See, one of the biggest things is that you buy free option when you buy a successful turnaround companies, because you are buying for a doubler or tripler. But actually, when the management is actually successful, they go for the kill. Now, this management in M&M or Bharti's management, they are not going to stop at whatever they are making. They will go for the, kind of a big, and the big thing is they went into trouble at $4 trillion economy. They will come out in $8 trillion economy. So opportunity size is multiplied, profit pool is increased, and they will go for the best. So I think in Mahindra and Mahindra, at least we are seeing 10, 11, 12,000 crores profit. But in Bharti, I think ROE is still pretty low. How do you see the future? Yep. How do you see where exactly, when will you ever eat 18% ROE of Anish?
Are you asking me?
Yes.
Okay. Well, in our peak, we had an ROE of about 32-33%. So, obviously, having an ROC of 12%, an ROE around that is not something we are very proud of. This industry still needs a lot of repair. Undoubtedly, we have turned around, but there is such a long run way to cover. And I won't say when. All that I know is we will keep moving forward. Our investors, any investor in the market, at least deserves a 20% ROC. And that's what we believe we have to keep working towards.
No, that's very well put. Anish, by the way, Raamdeo said once you start, for the person who's coming in at the lows, it's a doubler or a trebler, but when the new management takes over, they don't stop. It can go anywhere. So you want to give us some sense of where M&M is headed? Without, just a broad idea. What's the road looking like for M&M from here?
So for us, our focus is really on continued execution. In terms of your question, you know as well as I do that we can't give any forward-looking guidance on this part. But what we feel proud about is the fact that across our businesses, things are moving very well. And we are no longer just an auto company. In fact, if you look at the last 4 years, what we call a services business has generated more cash than either auto or tractors. And that's something we've talked about publicly as well. So we've started to see all our businesses really live up to their potential and drive significant growth for us. And what we want M&M to be looked at as a company that plays in 70% of India's growth over the next decade. And while we have leadership positions today in auto and farm, we have businesses that are very well poised to take leadership positions in multiple other sectors in the industry.
When you buy, Amit, as an investor, when you buy some of these sort of bruised blue chips, it could be a long gestation period in that sense, right? So talk to us a little bit about that mindset. How do you decide?
The gestation period is infinite. It can be 1 year, it can be 2 years, it can be 3 years. See, once you bought this, you are in, because you normally would want to buy it when, at least what I have seen was that the commitment was very strong. When you identified something like this, you would back it up with and put serious money behind it. So there was no question of entry, exit, getting in. So you were in it. And so there have been periods when the stocks, I have seen stocks which have been bought in front of me for 1 year, 2 years, they've done nothing. So we've been plagued with serious self-doubt, serious frustration. We have felt at a point of time there were 3-4 stocks in our portfolio which were turnaround stories. The markets were booming and we thought we are sitting in a bear market. So it's very difficult to go through these periods. You really need to be convinced. See, look, money can't be just gone and you can't find a 10-bagger, 20-bagger like that. Yeah. So you have to go through the pain, and we've experienced, Rakeshji has experienced serious pain. Yeah. He's not only experienced serious pain, he's experienced serious drawdowns from the time he has bought the stock again also. Even at the low levels from there also I've seen some stocks halving.
Why don't you talk about your escorts experience? Because you guys minted money in that, but the kind of pain you go through.
Yeah, so escorts for 3 years did nothing. And it was we bought escorts in 2013. Rakeshji bought it in 2013. 14 to 17, the mid-caps went basak when Mr. Modi came. Escorts did nothing. And it was a very large position for us. So we were continuous self-doubt was there. We would keep examining our position. We would keep thinking what is happening. And as it is, like Mahindra was a 40% player. They were a 10% player. Are they doing it right? Even the external factors were not good. The weather situation was not good. Competition was discounting. So it was a very tough period for 3 years. But then suddenly when things started turning, they turned around much faster than anybody could have expected. And it was just a dream story after that. Yeah.
Any other examples come to mind? Any other name like escorts? I mean, just to kind of run the audience through the experience of going through it.
How was the experience in Titan?
So, see, Titan is a story which everybody, like what Rakeshji is associated with. It has been his best pick and closest to his heart. And I was just, since you called me for this, I was going back and looking at some numbers. So while Titan has been 1,000x since he's bought it, I went and looked at what the balance sheet was when he bought the stock. Okay, like Raamdeo ji had put up over here that it's a bruised blue chip, what it is, and this kind of stuff. You guys, most of you, I don't think have looked at the Titan balance sheet, what it was at that point of time. Okay, Titan's market cap was 250 crores. Titan had 750 crores of debt. Titan's profit had come down from 23 crores to 8 crores. Titan's jewelry business had started, but it was just it was just emerging. Watch business was there. They had lots of money blocked up in working capital. So to go and buy an infected balance sheet like that, because he was convinced that the Tata name, the jewelry market is disorganized, and the Tata name will lead to people coming and buying jewelry, and the jewelry market will get organized. So this was the kind of balance sheet he invested in, sir. So while it's very good to look at the chart when we see right-hand side compounding, ownership for lifetime and all those things, and so you go back and look, so you see what kind of foresight was required, and then the courage to put serious money at that point of time, sir.
Yeah, he made a good point. Not only you need insight, you need massive foresight. You know, that foresight thing was there with Rakesh. Actually, in Titan, to be fair, for one of the institutional investors, I sold the stock from 140 to 30. After that, we stopped selling. And then one day I realized that all the leftover things have been bought by him. You know, so I'm the guy who sold the stock and he's the guy who bought it. You can see the difference. I made I made 25, 30 basis point brokerage and he made 1000x.
And Prashant, it's a 20-year holding now. And you've seen drawdowns where like you've lost 50% of your value. It doesn't happen easily.
No, absolutely. Anish, how important is, as you were sort of engineering that turnaround at M&M and that ROE target, etc., how important do you think is the external environment? Because, after COVID, generally consumption got a bit of a tailwind, right? I mean, especially at the premium end. Do you think that also helped? And to what degree? What you did, of course, was absolutely critical. So tailwind without the engineering in the company would not have worked. But how much would you attribute to, tailwind from the outside world?
So if you look at the facts here, there were two large factors that drove the turnaround. One is exiting loss-making businesses which had nothing to do with the environment. And second is the pivot to growth. And in the pivot to growth, the auto industry has grown single digits over the last few years. But it's really been the strength of our products, and we've tripled capacity and still haven't been able to meet demand. Similarly, the tractor industry has grown on average low single digits, except for 1 year, the COVID year was a strong year. But our tractor business has managed to gain share in a tough market as well. And then other businesses have grown from low bases in some cases, or a turnaround in both Mahindra Finance and Tech Mahindra from larger bases as well. So the external factor helped in the sense that it wasn't negative, but I think a lot of the growth was driven by a different approach that was taken by our teams to be able to get on a faster path of recovery and then go beyond that.
I mean, the product introductions, etc., right? I mean, you had to meet the market and what it wanted. So you had to do that from the company side. Mr. Gupta, you want to just sort of come in there as well? I mean, the outside environment, and again, is that example of Jio and when they came in, how much was, of course, you strengthened the balance sheet and you made sure the three things that you spoke about, but is that a big factor as well in your opinion? I mean, that the external environment eased out a little bit.
Well, ours was a strange industry because COVID really helped our industry. We had some of the best demand scenario for our industry during COVID. The work from home, all that added. So we were never had a great loss on that account. But yeah, external factors do make a difference. But I think if your industry is solid, you have to just keep the course.
Got that. Amit, the next question, how much to buy from an investor?
That is where I think Rakesh used to make a huge difference. I mean, you get an idea, 2,500 share kharid lo. He was not like that. He would buy 10% of his, 10% of the company itself, because he had a huge appetite. I think that is what really, when this kind of opportunity, because this kind of opportunities, opportunities come 30, 40 in a year, but you to understand and get convinced about, there are very few. And when you get that opportunity, and if you buy a marginal position, it's a wasted effort. Better don't bother about it. Yeah. So
I've never seen him put marginal money in these kind of turnarounds. He's always put very serious money. Relative to his portfolio, see, if you look at his journey from maybe 2000 or maybe earlier to date, whatever, maybe before I knew him and since 2000, since I knew him, relative to his portfolio, he always made outsized bets. So if his portfolio was 1,000, like if it was 100 crores, he would be making 10 crore bets. If it was 1,000 crores, he was making 100 plus crore bets. When it became a 5,000 crore portfolio, he was making a 250, 300. So his bet size kept increasing. And I've seen cases where he bought more than the promoter owned there. So it's like, we've seen, I don't know how. So even before that, Raamdeo ji, bet size is important, but even before that, the courage to buy is more important. See, when you are faced with that kind of a situation, all the rules you placed, you said you buy, but you never said courage to buy. Right? If you take that example of Indian hotels which he bought, in peak COVID, when all the hotels are shut down or they're being used as COVID centers, to suddenly go and buy 2% of Indian hotels, thinking that once COVID goes, things will get better, you need a different kind of courage. You need ice in your veins to be able to execute that.
So very difficult, at least for me.
So after that, it's like, so and if you ever come across, these are rare opportunities, so you should put in serious money behind it. Because it's going to be very painful.
No, absolutely. And Raamdeo ji, you were saying in the presentation that if you buy, आपने बोला 2,500 शेयर अगर ले ले कोई फायदा नहीं है. तो what you found in your study, does it? Now you have the framework. Now you cannot say you don't have the framework when such opportunities come in the future. You said you don't have the framework. Does the framework and the sort of back testing give you the confidence that you should go in and go in big when opportunities like this arise? And
Yeah, sure. Let the opportunity come, no? And let my bulb also, kind of work in the sense that I should be convinced that I wish Rakesh was here and to teach me this strategy. But since he is not there, Amit is the best guy. But, getting that conviction that there is no downside. What this study brings out is that there is no downside. From the point of maximum pessimism, there is no downside or very marginal. So that I can bear. And now my net worth is such that I can think about having a 500 crores, 1,000 crores position. At least technically I can have that position. But will I be able to execute? I mean, it's a point of time. Because right now there's too much optimism around. So we have to find the stock in a pessimistic environment, and it should be no-brainer. One of my friends talks about stocks which are no-brainers. I think Rakesh used to buy at a situation where it is no-brainer. So if it comes, obviously this time I'll be more aggressive. I hope.
Mr. Gupta, you want to comment? You've been listening keenly.
Well, the fact remains, in retrospect, everything looks like a no-brainer. But at that particular point of time, telecom is a classic case. In 2001 in particular, when we were very small, we didn't have resources. The question was not whether we will fail. The only question on everybody's mind at that point was when. So it was not whether. It was given that we will fold up, we'll go. So it does look like a no-brainer. We were a good player at that time also. We had just got listed. Stock had fallen from 45 to 19. Nobody was ready to touch our stock. So these things, I think sometimes in retrospect, do look like no-brainers. But at that point of time, they look very dangerous. And I guess that's where part which nobody has talked about till now. Some vision plus luck would certainly be playing a role. I don't know. Raamdeo will be the best one to tell us about it.
No, I think luck also comes from prepared mind. If I don't have the framework, what kind of preparation I have?
That I agree.
So it is very important that you have the framework. I think the biggest contribution of this study is that it very clearly lays out rules of the game. Now, how well you play is your courage, your luck, and your research team. Like Amit kind of guy. I mean, the way they research is very different from the way my sales side works. I mean, these guys are dedicated. I mean, they will have lunch, dinner. They'll literally camp with them. They'll go to the factory. They'll drink with them, sleep. So these guys, they don't spare anything. They literally know. I mean, there is a little difference between their analysis and leave it. So,
so one. Let's talk about the. So there are bruised blue chips, but are there also broken blue chips? Are there mistakes to avoid here as well? So while you laid out the framework.
No, of course. I think it has because there are not many broken blue chips. So there is a difference between bruised blue chips and broken blue chips. So sometimes because of the regulatory framework or completely a company which is by chance goes into, say, some kind of embezzlement, complete corporate swindling, you know. So then the companies don't get bruised and they come back. But the company is finished. Like, say, one of the corporate misgovernance, I would say, I mean, it's a very harsh word to say for any company. Nobody likes it. But say CG Power. I mean, it's a brilliant blue chip company. I mean, leader in their own field, transformer, switchgear and all that. And then they literally went through the bankruptcy because of complete misgovernance financially as well as in all aspects of it. And from there, when you see the change of the management, from a completely mismanaged to most brilliant guy to come in, Velayan and Murugappa, most ethical, most competent to handle. And then on top of it, turnaround happens and then tailwind comes. So it's like a complete exponential from $5-6. The stock is now more than 1 lakh crore and stock is 700-800 rupees.
And 1,000 crores in net profit last year. So,
and there is, capex cycle just about started.
Absolutely.
So they'll go for the kill.
Amit, you want to add anything to this in terms of mistakes to avoid while we talk about all the opportunities in the upside?
Mistakes to avoid when looking for these stocks, or mistakes to avoid which leads to a stock becoming like this. Yeah.
Mistakes to avoid when looking for opportunities in this area. I mean,
it has to be a very deliberate decision. Yeah. It cannot, your portfolio cannot be contrarian or consisting of this only, but this happens once in a while. So you cannot say, I'm going to be constructing a portfolio consisting only of these kind of stocks. Yeah. So if you think that every stock you can pick up, you are a contrarian and you can make then you are going to be in trouble. Yeah. These kind of opportunities don't come often. Yeah. That can be the biggest mistake. Yeah. And having a closed mind. Like for example's sake, like in telco, twice he had gone wrong, Tata Motors, and still he put money third time. So you have to have a very open mind also.
Anish, just to sort of wind this down, what is your experience being when dealing with investors, speaking with them, and how's that journey evolved in terms of managing expectations and sort of taking them along, but at the same time also, of course, you have to do what you have to do for the company, and then the market does what it does.
So we have valued the input from many of our investors and we interact with them on a very regular basis. From everything I've seen, it's important to have a very clear approach that we outline and then be able to deliver on what we've said. Yes, there may be some times when things may not go exactly right, but then we've got to be able to stand up and say, yes, this did not go well, we did not execute well here, here's a lesson from this, and then we go back and fix it and move forward. Because everything's not always going to go 100% right, but taking ownership for that is important. So essentially, it's a clear strategy, deliver what we commit, and take ownership for things that haven't worked well and fix them. And that's worked well for us.
Mr. Gupta, last word to you on that front.
Well, on the investor front, we were one of the first companies when we got listed in 2002 to say we will not give a guidance. Those were the times when it was not only fashion, it wasn't fashionable, it was kind of mandatory to give guidance. And we did not want to put undue pressure on ourselves or our execution teams to chase the tail. Because things change, strategies change, the way of delivering, that changes. So we never gave guidance. But what we believed was be extremely transparent. Not for the investor, but for our own teams. The more transparent we were, the more we could see the mistakes which we were making, the more feedback we got, and that really helped us in correcting the course whenever something was going wrong. So investor feedback can be very good, but to just go with what the investors would be wanting may also not be a great policy for a corporate. One cannot, as a corporate, to my mind, get obsessed with share price. One should not.
No, that's very well put. Let's wind this down. We have the best of the stock pickers here. Raamdeo ji, you already told us Asian Paints. आपने बोला जब बल्ब जलेगा तो
ऐसा मैं कुछ नहीं बोला भाई. So, this is, if you see that 11 companies we have put in the report, all kinds of companies are there. And
but don't limit yourself to the 11 companies. I mean,
No, right now the data says that more than 30% decline in the price from all-time high, there are 11 companies and they are blue chips.
Correct.
Now, first it has to fall 50%.
Okay.
It has not fallen.
Okay.
And I don't wish them to fall that much. So don't misunderstand. See, the opportunities come walking to you. There will be so much of pessimism, there will be so much of corporate war, profit war, that it might throw opportunity. Because right now markets are in bullish condition.
Correct.
The valuations are 10 book, 20, except for IOC. But I don't like that segment that much. But IOC is about 1.1 book, and it's fallen by whatever, crazy number. So I think that is one stock. And when you're saying IOC, obviously HPPP also comes with that. So clearly that is one segment to watch. Now what happens to the oil price? By chance oil price comes down from, all the charts they say that it is going to come down to 50. If by chance that were to happen, you'll see story developing out there. So I think, but I don't have anything live where I can put a finger on.
But the watch list is ready.
Watch list is ready. Always it will be ready.
Amit?
Repeat your question.
Sorry?
No, what are you asking? Like,
Anything on your radar right now, which has fallen enough, which looks like a...
oh, you want a particular stock?
I mean, 1 or 2 or 3, up to you.
No, I've got nothing like that to...
Nothing?
Maybe Anish has some.
Yeah.
I was going to say M&M, but I cannot say that. So I should just...
Go ahead, Amit.
Let me ask one question about M&M. See, now one of the biggest transition is going to be from IC to electric. You are basically an IC company right now. And I think you are on the verge of launching one of the biggest, a good portfolio of electric vehicles. How do you see next 5-10 years, at what pace this transition is going to happen? Because when I was driving electric vehicle, I think the BYD vehicle was amazing, the kind of pull and the noise-free, the saying. So future definitely belongs to electric. And I think you also believe in that. So how exactly this is going to transit for you? Is it disruptive? Tesla and all are going to come? Or you have a game plan ready for that and mint money in electric era also?
So I will start again with facts. We've recently launched 2 born electric vehicles. These are on a made for electric platform, and the reception so far, while we haven't opened bookings as yet, is very, very strong. We've seen 1.3 billion views on social media for the vehicles, and I would let the product speak for themselves. So as they come into the marketplace, we feel very confident that they will match the best in the world in terms of quality. And that's going to drive the transition to EVs, because as consumers see products that they love and products that take care of all the range anxiety that used to be there earlier, because the rated range in these 2 products is going to be 682 and 656 kilometers. And the actual range on roads that we've tested over the last 6 months across 21 cities is greater than 500 kilometers in every single city. So you're going to really take care of all the range issues. And what we expect is that 30% of our portfolio will be electric in terms of new sales in the next 3 to 4 years. And that's going to really help jumpstart the transition to electric from the country standpoint.
How much of the IC world, in the sense that all the 4-wheelers, how much of that you see in next 5-6 years to be electric in practical way? How much transition can happen?
I don't think the transition is going to happen that fast overall in terms of everything moving to EV, because with the growth in the market, our forecast is we will be making the same amount of ICE vehicles we make today, even 5 years later. But that's because we're going to grow in electric as well. Because there will be still some applications for 4x4s, off-road vehicles, where you need the torque that diesel provides. And in some sense, we will see that transition, but it's not going to happen overnight.
You know, for both Mahindra and Bharti, there is one common, I don't want to say threat, but Mr. Musk. There is his Tesla, there is his Starlink, and both are waiting to make an entry into the country. Is that, are we going to see cheaper Teslas? Much lower import. Is it possible? And how does that play in the marketplace?
So we have benefited significantly from competition over the last 25 years. The kind of vehicles we make today, we would not have made if it hadn't been for strong competition. And from that standpoint, we would welcome Tesla or anyone else to come in as well. And as I said earlier, we will let our products speak for themselves.
Mr. Gupta, I mean, Starlink, does it really go head to head in terms of competition with incumbent telecom players, or is it largely for, as they say, dead zones? I mean, the satellite service in terms of what Starlink offers, or does it have really commercial use in terms of what you offer? Go on.
No, it can be. I think with direct to device coming, if you roll up 10, 15, 20 years, 10 years maybe, enough capacity, it can be. And I think all sensible companies, to my mind, must always be threatened by something or the other to be on their toes. As far as Mr. Musk and Starlink is concerned, I think they're doing a great job. Definitely, they are becoming a threat to the developed world telcos. Now, why I say that is, it's a matter of pricing. In India, a GB costs 13 US cents. In US, it costs $5 to $6. He's already at that price. And therefore, in a world which is used to $50, $60 ARPU for 6 or 7 or 8 GB of data, I think it's already a threat. But India, in some ways, a very defensive story. They are so cheap that it will be a long time before it becomes a threat. And by that time, the cost of reducing a GB on terrestrial networks will further come down. Because the capacity which will be available on 60, which would come later, will be phenomenal. So, yes, I think quite safe. But yeah, this is certainly a threat. It should be watched very carefully.
Got that. I think we've come to an end of our discussion here. Mr. Gupta, Anish, thank you very much, both of you, for coming on. And I'm sure with the businesses you've built, with the leadership position that you have, both of you will, of course, weather any challenge which comes your way and continue to grow and create wealth for investors. Thank you very much, Mr. Gupta and Anish. Amit, thank you so much for candidly sharing all those experiences with the viewers here. It's been a real pleasure. Thank you very much. And Raamdeo ji, thank you for being a teacher more than anything else with your wealth creation studies. We really enjoy it, look forward to it. I certainly learn a lot from it.
Yeah, thanks very much to all the people who have come here. And very special thanks to Anish and Akhil for sparing their, from busy schedule to come here and talk to the investors about their experiences. Thank you very much.
Thank you.
Thanks, Prashant, for moderating such an insightful...